We're in a really great time right now to increase your buying power. Why is that? Well, mortgage rates are on a downward trend right now. There is volatility, rates fluctuate up and down, but you can see here on this chart, rates have come down almost a whole percent over this year, which is great to see. And most economists are predicting over the next 6 months, hopefully, we're going to continue to see this downward trend. Nobody knows where the bottom will be, but even just seeing in the rates around sixes is much better than when they were getting up close to 8%. So, all that to say, if you pre approved at any point within the last few years while mortgage rates were on an upward trajectory, it might be worth it to go ahead and update your pre approval. Have a mortgage consultation with us. We can see how much your buying power has changed based on where today's rates are. And we can also look at projections. If rates continue to come down, what does that look like for you? So, I want to show you an example here. This was a person who actually was pre-approved in the spring of this year, so not too long ago, but rates were up at 7.5%. So you can see here in this first column, they were looking at houses for $450,000. They had 20% down. Rates were in the mid sevens. That put their payment at about $3,200 a month. Now, if rates were at 6.5% instead of 7, and again, this is not a rate lock, not a mortgage commitment, not a quote. I'm just using this only for informational purposes here to show you what happens to your buying power when rates come down a whole percent. So if the rate's down to 6.5, and you were looking at that same 450 price with 20% down, your payment instead of 3,200 a month is now 2,900 a month. So that may feel a lot better than it did 6 months ago. The other side of that is if you're like, well, I was comfortable with that 3,200 payment from when I pre-approved in the spring. So can I get to a higher price? Well, this last column, you can actually get up another 50,000. So if you go to 500 and you can still do the 20% down and you're at 6.5, your budget is going to still be around 3,200 a month. So that may open up a big window of possibilities for you to go from 450 to 500. Now, keep in mind, to maintain that 20% down, that also means you've had some extra savings. You need 100,000 down instead of only 90. Hopefully, over the last 6 months, while you've been house searching, you've also been saving, right? But if not, then that may not be possible. Also, something to keep in mind as you go higher in price, of course, real estate taxes and homeowners insurance might be higher. So this isn't a perfect one for one, but it does illustrate that a percent lower in rate could have a really big impact. And again, great time to just update things, see where you're at, and be ready so that if you do find the right house that comes up, you'll know what to expect. And you may have some more opportunity if rates do continue to decrease. Let's hope that the economists are right and that we do see that happen. So any questions, if you're ready to update that mortgage pre-approval, reach out to our team. We'd be more than happy to help you and provide some updated scenarios to you.